welcome to TraderMerlin show. A little bit hectic over here. Bear with me for a little bit of a late start. In studio recording all day today, and I'll be recording all day tomorrow. But I'm still going to do a show for you guys here, and also going to have a show with John Rowland tomorrow. Today in studio, I am 100% solo, although you may notice a slight difference with even more soundproofing going into my studio. Hopefully it sounds better for all of you. So, hello, Gio from Mexico. All right, hope you're on vacation doing something fun. John, up in Bellevue, Washington. I'm actually going to be going through Seattle here soon. I'm going to be doing a cruise up to Alaska. And then tentatively, for anybody who's in the Bay Area, I may be doing a presentation in San Francisco for the Money Show. It should be an exciting one. And I'm still working on the details of that, but I will definitely let you guys know if and when I finally make it up to San Francisco to do a trade show there. All right. So, yeah, little Pink Floyd, Animals. Great album, by the way. Yeah. People are like, to be more respectful and representative of the financial community, you should wear a suit and tie. And I just go, I don't know if I necessarily need to do a suit and tie, but I do have plenty of suits and ties. Today, we're going with that Pink Floyd t-shirt. Anyway, let's start things off with the discussion for today. As you guys may have recalled from the wrap-up of yesterday's show, Jerome Powell was speaking at a conference today with the Bank of Canada president, or I forget what the exact title is, but from the Bank of Canada. And it was a little panel discussion talking about the economies, interest rates, labor markets, kind of similarities and differences between our two countries. And while I didn't get a chance to watch all of it, I did watch what Powell said in between my recordings with Kayla Christine, which was fun to record. There's maybe some new videos out there with her soon. With the comments that were made, though, some of it was rather interesting. I had to take little scribble notes here on what I thought was really good. I like the comment there from Lisa. Showing your age, Merlin, I think the suit and tie went out the window after COVID. Because we all work from home. I mean, you're lucky. I don't even wear pants. I do the show completely pantsless. Just, thank goodness we don't have a stand-up set anymore. I think that might be you, Chloe. Just hit the, you might want to refresh. So here's some of the highlights I got from his comments. And of course, one of the things that we have to understand is this is a constantly evolving process of Jerome Powell and what he says. And of course, he is, he's the moon. And then you're like, wait a minute, the moon? Well, the moon is this gigantic impact on tidal forces here on Earth, right? Because of the moon's actions, we get these high tide, low tide pieces. It's that gravitational pull of having that object rotate around us. And I feel like Jerome Powell is the moon in this case because he's causing these ebbs and flows of financial markets, and we're hinging on every word he says. So, yeah, I know, Joe. That's why I was too slammed doing OTA stuff. He basically said that there was a lack of progress towards 2% inflation. And I can't help but to go back to my comments from the past few shows, which have been, you go back to 2022, Jerome Powell and pretty much every member of the Fed said inflation transient. Janet Yellen saying inflation's transient. It's nothing to worry about. No big deal. We get into 2023. It's, this is kind of an issue. We are going to probably start to raise rates. And you saw it just aggressively raise because inflation was certainly not transient. It was just this 800-pound gorilla that came beating on the financial markets. So, of course, the Fed does everything reactionary. In this case, I think they're trying to be a little bit more proactive. Now, of course, all of the markets are expecting rate cuts this year. And before I go any further, I did do a poll before the show started, and that was this one right here. How many rate cuts will we get this year? It's popping up in your chat right now, so you guys should be able to get that one. For the people that are watching the recordings at some point down the road, hopefully you can participate in that one as well. So the question I have is, how many rate cuts are we going to get this year? And notice I only have 0, 1, 2, or 3. Of course, we do know that there's possibilities outside of that spectrum, but at this point, I think that those are your only real 4 choices for the remainder of the year, unless things get really out of hand or become incredibly rosy going forward, which I don't necessarily see that happening. So, he echoed my sentiments, which is we've got great strength in jobs. Jobs is off the table. And remember, that's their dual mandate, full employment and price stability of the dollar, or price stability. So we already can throw jobs out the window. And then he proceeded to talk about the inflation data. And I thought some of this was interesting. He says, the previous 12-month core PCE was little changed, right around 2.8%, right? And of course, they wanted at 2%. So we're still in the 2 range-ish. Now, what was more of interest is what we've been talking about on this show, which has been those numbers are not legit. You're looking at 12 months ago, which was at when we had this massive crash in inflation, but numbers are ticking back up. Again, we're seeing bond yields increase. We're seeing commodity prices surge to the upside. Oil, natural gas, well, natural gas, no. Oil, yes. Metals, gold, silver, which may not be that impactful for inflation, but those are also surging. You have a lot of commodities, softs and grains as well. Cocoa is at the highest price in the history of mankind right now, right? Oh, but inflation's under control. So the second factor, remember the first one was 12-month core PCE, little changed at 2.8%. Then you cited that the 3 and the 6 month are well above that, which tells me that now we're seeing the turn back up in inflation. And it did feel like he was a little bit concerned about that. He said, with greater confidence that inflation is trending towards 2%, that's when we will cut rates, right? We'll cut rates when we get inflation, greater confidence that we're moving back towards 2%. But he said, and I quote, recent data has not given us greater confidence, and it may take longer to we may maintain this pace longer, allowing restrictive policy to stay in place even longer. And I thought, oh, okay. So I'm going to leave that poll up there for just a few more minutes here. Unfortunately, I can't vote on it, but I will tell you what mine is before I can see the results here. I can't see them right now. I just see one number. I can't see the other part of it. So what does it mean for us? All right, you and I are obviously going to be participants in whatever decisions are made because we're part of this economic roller coaster and this financial market fun that we're used to on a daily basis. So let's look real quick. Even though you had companies today like Bank of America report great earnings, they got crushed today. You look at XLF. Okay, financials were down. Again, this is like almost a 3-week period where we've seen financials drift lower and lower and lower. I'll look at the broader markets here and just kind of sprinkle those in. So your NASDAQ. I actually thought we'd see more follow through on this negative stuff over the weekend with Iran and Israel and the U.S. and just global tensions. We really didn't get much follow through, right? We had that Monday big down day, but today actually looking okay from the NASDAQ's perspective. S&P was slightly down, although a similar picture, but no real momentum and panic follow through, which for anybody who's bullish, this is probably a very good sign. The Russell continuing its slide, and again, I do think that 1940 mark, which we kind of have mapped out here, is your next logical stopping point for the Russell. But most of them still drifting down here. So it wasn't like this caught everybody off guard. I'll even show you a 5-minute here so we can kind of see when this came out. I want to say it was right in this window right here. We saw these big moves up and big moves down was when Jerome Powell was speaking at that conference. So it did create its volatility, but didn't really steer it in any particular direction. Now, the Fed funds futures hasn't changed yet, although we looked at that a couple of days ago. It is looking more and more like fewer rate cuts this year. And if you look at the comments that were made today, it really kind of doubled up on we can keep rates right where they're at for longer. Job market is robust. We're really just worried about inflation. So anything that tips that inflation factor is going to cause these rate cuts. So let me go and see what the final tally here was for you guys. And the poll, oh, by the way, I am in the 1 rate cut. So I don't know what that is. Let's see, 48% of you said 2 rate cuts, 35% said 1, 16% said 0, and nobody said 3 rate cuts. Interesting, because that's what the markets have priced in at present moment is 3 rate cuts. So none of us agree with the markets. I think we're all maybe a little bit more conservative with regards to our rate cuts for right now. Let me bring up the FOMC countdown. Oops, nope, I don't want to do that. I'm going to go to the FOMC countdown page here real quick just so I can show you what that's doing. Unfortunately, not prepared today. And we can see exactly how many are priced in, and maybe it's changed over the past couple of days, but I do think that by the end of the week, it'll probably drift even lower than what we are anticipating. So here is for the end of the year, the expectations. And have they drifted up at all since yesterday? They have, in fact, gotten better, meaning fewer cuts. Right now, it looks like the probability, the odds-on favorite is 3 rate cuts. There's 34% there. Actually, I'm sorry. As of today, it's 2 rate cuts. 34% for 2 rate cuts, 13.6% for 1 rate cut, 0.2% at 0 rate cuts, and then we have, let's see, 4 rate cuts was going to be 15.3%. And we've noticed if you look from this yellow highlighted column to the one on the right-hand side, they have all shifted up significantly, right? There was thought that back in March that we might actually see 7 rate cuts by the end of the year. And that's not even a possibility anymore. At least nobody's thinking that. Big Eb says 2 rate cuts for 3.9. All right, Big Eb. I'm looking forward to winning that bet, my friend. I don't think we'll be at 3.99. Let's take a peek at those rates. So what Big Eb's referencing is we have a wager that he thinks that the rates are going to get down below this 3.99 mark. Let me go back to the daily here. There you go. That lower red line you see, it says Big Eb owes me a beer. Pretty sure I'm going to win that one. He's got till the end of the year. So back in, you got quite some time to get there. I think there's actually a vertical line there. There you go. So Big Eb thinks that by the time we get to this blue line, at some point, doesn't have to be below it by then, but at least any point between now and then, we'll be below that 3.99 mark. I don't see it. One thing that is very interesting, guys, today, this is why I love patterns. They don't always work, right? But you guys saw me do this. This isn't a Sam Seiden after the fact gloat about my trade. You saw the levels drawn in, and you know I love ascending triangles. We had that ascending triangle on this 10-year. I took this measuring object, which represents the distance between the peak here and the baseline, and said, all right, if it does break, what's your target? And man, that actually just hit absolutely perfect. As of today, hit our target for that peak of this line, which is right around 4.4, almost 4.7%. So love patterns like this, especially when they come to fruition. Of course, I don't trade the bonds, unfortunately. I am loving this because I think the higher these yields go, the more opportunity it is for me to actually allocate some money and buy something long term and lock in a fixed rate of return. Now, for anybody here who's nearing retirement, this also could be a very interesting moment for you. What I mean by interesting moment is, you know, right now Kayla and I are working on a strategic investor course, which is looking at longer term investments, portfolio theory, things like that. And one thing that most people have a challenge with is, what exactly rate of return do you need to sustain your lifestyle at its present moment? And if you know what that number is, like how much money it is, let's say you need $5,000 a month to live your life. Of course, not out in California. You can never live on $5,000 a month in California. But let's say you live somewhere else where $5,000 a month covers everything you want to do. You could potentially go out there and buy bonds at a decent yield and earn some income to offset that and start to chip away at what you need to earn from working through the bond market. So if we get some nice high yields out there, I'll tell you, if somehow this 10-year got up to that 7-8%, I'm probably going to allocate buy some 10-year bonds and just know I've locked in 8% for the next 10 years. Of course, long way to go before we get to those numbers, but I think there's definitely an interesting possibility for anybody who's retiring. I'm fully retiring next Friday, 4/26. All right, good. Why are you really big? Is there a reason for that one? Is that your Bitcoin? Does the Fed have to increase or decrease interest rates in increments of 25 basis points? No, Jay, they do not. They can do whatever they want. I saw 50 basis point increases, I believe back in this is so long ago. This is early in my trading career. I think Alan Greenspan he cut by 75 basis points in 2020 or 2021. And then we also had back in 2007, maybe early 2008, when the market started falling apart, they did another 75 basis point cut before the markets open. That was nuts. Greenspan did it during the trading day, and it was one of the craziest things I think I have ever seen in trading. It was absolutely bonkers. I should have put that in my crazy things I've seen while trading. But yeah, Greenspan did 75 basis points while the market was open, a surprise to everybody, whereas the one that happened under Ben Bernanke, that was done before the market opened, so the market had a little time to digest that. It was pretty crazy. Let's see. Ilio, I suggest institutional investors to increase their exposure in copper futures as well as in copper mines. Well, I think for everybody that there should be some allocation to precious metals. Now, precious metals typically leaves us with, your gold and your silver, platinum, palladium. But I think base metals as well. Certainly, I like copper, but I think that copper is no longer the key industrial component that it used to be. Copper used to be all your pipes copper, right? And now that's changing. A lot of it's going to P-TEC and synthetic plastics that last longer, don't corrode. So I think you're seeing new construction projects use less and less copper, which takes away, in my opinion, much of that historical utility. Not to say that copper is not a decent investment in the short term, but I think long term you have to think about it kind of losing its luster, no pun intended. But here's your copper chart, looking decent, certainly over the past couple of months. Okay, so let me go back to my thoughts on the FOMC. Now, I think you're going to get one. I think what we're going to experience is continued inflation. And I think, again, a lot of it's going to have to do with the factors I've mentioned before, which is the 10-year bond, right? The higher the 10-year goes, the higher rents are going to go because whoever's buying properties needs to charge higher rents to offset higher costs. That's simple. The second part of it is going to be crude oil, which has been hesitating for the past week and a half, but still showing great strength, hasn't closed down below that 84, 85 mark, which to me is this kind of a line in the sand. If this does continue on up, then I think inflation keeps going. If inflation keeps going, then the Fed will hold longer. There is a dark horse here, the black swan, if you will, and that is, what if inflation starts to surge a little bit more? And a lot of people, I would say this, I think we can look at the survey results here. Let me go back to survey results. Nobody, I didn't put it on there. 16% of you said that they're going to keep them right where they're at. If I had 5 spaces on that, I would have said raise rates, which is this very long shot thought that maybe they actually raise rates this year. Now, of course, we know there's only one real major situation that would happen, and that's if inflation really starts to surge, which I think that is a possibility. So, you could see by the end of the year rate increases, which I think would blow people away. And, he mentioned it in his statement. Hold on, I actually wrote it down over here again before I threw this on the paper on the ground. He says, well, I didn't write it down, but he says we have significant room to tighten. And to me, that was kind of interesting because when he says we have significant room to tighten, that basically means that, yeah, they're sitting at present levels, right? We know that their current rate is 4.75 to 5%. Sorry, 5.5 to 5.75. Excuse me, 5.25 to 5.5 is where we're at right now. That means that they could very easily jump that to 5.75 to 6 to 7. They have that potential, and by him making those comments, I think it opens the door to that potential discussion if, in fact, inflation continues to run. So, something to think about. I don't know where it's ultimately going to end. I have no crystal ball on this, but I'm just reading the data, and as I've been saying, like a broken record, inflation, I don't believe is dead. I've been saying that for months and months and months now. I think it's going to come rearing back, particularly because of what happened. That giant sell-off in commodity prices makes everyone feel warm and fuzzy, but now all of a sudden they're surging again. So, there is that long shot, which if I was to say we'll have 3 cuts this year or we'll have a raise, I actually would lean more on the side of we'll have a raise. Now, there we go. Retiring your Bitcoin hits 250. I think you mean 250,000, Oliver. Because if it hits 250, you lost all your money in Bitcoin. And if it does get to $250, I will buy as much as I can. It's not going to be easy to retire at 5% fixed rate when we shift to high inflation regime. Correct, Andres. You're correct. But what I'm saying is, at some point here, that 10-year bond could give a nice attractive yield where someone nearing retirement can say, I just need this amount of money coming in, I'll lock it in. And that's something that we haven't had for a long time. If you look at these bond prices, let's go look at the bond yields. And I'll go back to the 10-year here. And let's go into a weekly so I can show longer term. This is the highest that you could get for the bonds since 2007. So anybody that's retiring and wants to buy bonds, which you're told to do, right? You're told to buy bonds to get income. They really haven't provided much income for the past 17 years. And now all of a sudden it's okay, well, they're almost above 5%. But you look historically, there's not really a great rate of return here. Obviously, if the S&P 500 returns on average 8% per year, if you get the bonds above 8%, then you're golden for the long haul and lock in that 10-year. So I definitely agree with you on that one, Andres. It's not going to be easy to live off 5%. However, you also have to accommodate for inflation in that as well, which historically is around 3%. Might eat away at some of that. And Big Eb is correct. He says there's no reason to lock up money for the 10-year when the 3-month is paying 5.3 annually right now. Correct. However, when that short end does drop, and I think that's a pretty clear consensus, at some point they will lower the short end of that yield curve, then all of a sudden, while you've been enjoying that 5.2%, that could dry up, but the longer end may be paying you more. So for now, go with the short end, right? Go with the 3 months. But again, anybody who's planning out their retirement and thinking long term and must think that way, it is would be a good thing to keep an eye on the 10-year, maybe if rates get high enough, right? Where are we sending this thing? Oh, Big Don, hey, you might get executed on your Tesla. Are you still at the 162s? I sold the 160s expiring this Friday. Again, just doing a weekly. We'll see. I might get stuck with those 160s, but I'm good with that. I'm good with that. Yeah, what are you talking about launching? Was you that said now we need 2.5 million to retire on? No, I haven't done that. I haven't done a show on what you need to retire. But again, you can't do a show on what you need to retire that's universal, right? Everybody in this group here is living off of different income streams, living in different geographical areas, paying different rents and mortgages, different food costs. You know, that you can't say how much you need to live off of, but there are formulas where you can calculate all out what you need personally to retire on. And I think that's an exercise that everyone should enjoy doing. I believe that most of us have been taught incorrectly by the financial institutions, mainstream media, and their talk track is just save money. Put your money in a bank, put it with a financial advisor, we'll grow that money for you. And the subtitle at the bottom should read, we believe that you're too stupid, and we want to convince you that you're too stupid to do it on your own. It's so untrue, right? You can absolutely do it on your own. I think it's all about allocating and understanding exactly what you need. I took a class years ago. We were creating the proactive investor course, which became the strategic investor course at OTA. And I sat with several different instructors that are, long-term kind of wealth advisors, financial planners and stuff. And it was really interesting. Day one of the class, and I sat in as an observer, but I was a student because I'm always learning. And he says, what rate of return do you need right now on your money to live the life you want, including with inflation? And he said, does anybody here know? And not one person in there raised their hand. There's like 35 people in that room. Not one person said, I know what my number is. Now, how many of you guys need that, right? How many of you guys know exactly your rate of return that you need? And of course, you could say, 100% rate of return per year. That's excess. I mean, just to maintain your lifestyle as is, there's a percentage on the assets that you have, including inflation, that you could, if you grew it at that rate, then you're set for the rest of your life, right? What is that number? So we sat down and we did that exercise, and I thought it was very eye-opening. I actually needed a lot less than I anticipated. I thought I needed a much higher rate of return, and turns out I really didn't, as long as I could lock in specific numbers, which is why I was talking about that 10-year. All right, the 160s, and yeah, I'm taking my... Okay. So you're gonna take them. Are you gonna sell calls against those? Let's see. OTA used to have a personal finance class. Yeah, it wasn't really a personal finance class. It was just called Strategic Investor. And then there was Proactive Investor, and then they changed it into Strategic Investor. A really good class. I mean, I think the more that you know about the long-term stuff, the better. And don't be pushed into believing that someone else has to manage your money. Everybody can do it on their own. When there was problems with the FTC, one of the arguments was, you can't say that anybody can do this. And I disagree. I absolutely believe that anybody can be a trader. I believe that anybody can manage their own money. You just have to have discipline and follow rules. I think the Turtles proved that by taking just randos off the street that didn't really know much about markets and showing that, hey, they can do it. There you go. RG says, I do. I'm a strategic investor student, right? But how important of an exercise was that, RG? Right? It was eye-opening for you to be like, oh, wow, this is what I need. It's an actual number based off all of your data. And you go, okay, now all I have to do is figure out how to achieve that rate of return. To me, that's phenomenal. Let's see. Tom says, retirement plan, figure out a simple trade and trade until you die like rubber ducky. I like that as well. That's an easy one. But at some point, you're not going to want to sit and do weekly options, right? You don't want to do weekly expirations. That's why I'm really working for myself on mastering that 1 month wheel. And that way I can just look at my trades once a month and go just do anything I want to do and know that that's generating income for me. So Good, RG. I'm glad you support me on that one, because for me it was a wow, eye-opening kind of experiment. That was very, I guess it's critical, because every one of us has a different rate. But once you know that, then now you can figure out how to attain that. Whereas most people are just trying to attain all the money they can, and that may not be the right recipe for retirement. Turtles are a great concept, right? Great experiment. Just a phenomenal story of taking randos and saying, follow this rule, follow these rules, and you'll make money. And if you don't, I will remove you from the floor. Phenomenal time, phenomenal experience. All right. So let me run through our top 7 here real quick, because I got to go back into recording in the studio. I've got a ton of stuff to cover still. I like the exercise and strategy answer. I found I need a lot less than I thought, right? And maybe, Lori, maybe that has to do with the industry making you believe that you need a higher rate of return, because now you need their help to achieve it, right? That's at least the way I believe it's structured. So yeah, I'm glad you guys have done that exercise. You don't have to take Strategic Investor to do it. It's just in that class, it's all very structured on how to achieve that number, but you can figure these things out on your own if you wanted to as well. But you should all be figuring out what your number is. What's your number? Okay, bottom of the list, Bitcoin continuing to struggle. No surprise there. Again, I got a couple emails, people asking me, like, what about, I said it could drop, 10, 15%, and said, well, why? And I already mentioned that on yesterday's show. A lot of that I do believe is going to happen because of buy the rumor, sell the news. It's also going to happen because of the mining situation, where miners might start to liquidate their portfolio. So I think those two factors could push it down. Now let's just go from the peak that we have back here in March. We're going to go to 10 or 15%. Keep in mind that this line that we have on the screen right here, this red horizontal line, is already 18% off the high. All right, so let me move that to when I made that comment, which I would believe was back in here, somewhere in there. If I said 10 to 15%, you're still very close to it. I think there's actually more downside potential here for Bitcoin. Again, downside for the next couple of months, but then much bigger upside moves once the halving happens a couple months after that, and then we get through the elections and we see a changing of the guard, changing of the regime. That was funny, Tomasina, you posted that one and sent it to me about Donald Trump saying he's going to back the US dollar with Bitcoin. Yeah, right. There's no chance that's going to happen. Donald Trump is not going to back the dollar with Bitcoin. This is all, I will say this because it's going to get your votes, right? He's like, okay, how do I get younger generation to vote for me? Oh, I know. I'll back things with Bitcoin because that's what the younger generation wants. Okay, I'll just say that, and I'm not going to deliver on that. There's no way you're going to back the US dollar with Bitcoin. It's like the gold reserve strategy, that didn't work. I mean, it did, but it handcuffed governments. If you back your fiat currency to a commodity or something that has scarce resources, you're locking yourself in. You can't do the reckless spending that we can do. Imagine if COVID hit again and we're locked to the dollar backed by Bitcoin. And all of a sudden you printed, trillions of dollars worth of dollars that we did. You couldn't do that if it was backed by Bitcoin. You'd have to buy more Bitcoin to back it up, and they wouldn't be able to do it. So it's not going to happen. Absolutely not. Let's see. But isn't it a reasonable rate of return based on current capital? Yes. So part of that calculation, Dave, is let's say you got $100,000. Okay. If I earn 5% per year on that, how much am I going to be bringing in? I have to factor in inflation. You have to factor in your consumption. And the goal is to get it where that $100,000 pays you enough, or whatever amount of money it is, pays you enough for your living expenses and doesn't deteriorate right away. It can deteriorate over time, but you want to make sure that once you pull your interest out of that account gains and paid all your expenses, that account has dropped very slightly, right? When you go into retirement, that's kind of the principle of it, is you want to make sure that you have earning a rate of return on your retirement account so that it does continue to last longer and longer. It's not like once you hit retirement, your account stop earning, because you'll just burn right through it really, really quickly. Back the dollar with Bitcoin eliminates reckless spending. Approved. Yeah. Tom, I would approve it. I think it would be great, but the government wouldn't have it. Can you imagine a government that wouldn't be able to manipulate the currency or spend like they want? They'd be responsible. They'd be resisting conflict. They'd have to look inside and audit themselves and say, hey, we got spending problems. Do you think a government really wants to do that? Do you think the ECB is trying to do that? Do you think the Bank of England's trying to do that? Do you think that Bank of Canada? No, they're spending, right? That's how you grow your economy. Flood the market with money. So I don't believe it'll happen. I think it's a pipe dream. Look, maybe I'm being cynical. I think you guys would all agree that I would be overjoyed if it happened because I'm holding Bitcoin. It'd be a good one. Bring it. Let's see. Sorry. Bitcoin has a historic drop right after the halving, and it starts the drive up. Not historic. You mean historically it dropped. It has it either goes sideways or has a slight drop. It doesn't usually have a plummet. I went over that on yesterday's show where I circled all three of those the last three halvings. And it's kind of boring for a few months. 3 to 6 months, it kind of goes sideways a little bit, mainly down to slightly up. But then it really kicks in. And to me, that's the challenge. Margaret says the gold standard was a great idea. I agree. Absolutely. But what did it do? It handcuffed the government. And here's the problem with it. With the gold standard, the government could say, yeah, we've got the gold. We've got it. It's here. Show us. Well, here's a picture of Fort Knox. Well, how do I know you have enough gold to back all the dollars that you've made? Well, it's here. Look at the picture, right? We didn't get to go through and audit that. If they do it to Bitcoin, it is totally auditable. And we'll be able to see, and I guarantee you it's not going to happen for that reason, because we'd now be able to see the government's account. We could see where they're holding that Bitcoin and go, you don't have enough to cover all this money. Not going to happen. No way. Not going to happen. It's unfortunate. I wish it would, but just my cynicism towards governments and politics tells me there's no way they'll relinquish that power and the ability to print money as they have. So I was starting to go up this list. I was going to do a 30-minute show, but we're not. It's already at 33. I'm going to wrap this up probably in the next few minutes, so let me run here. We already looked at the Russell, right? Looking ugly, drifting down towards that 1939 level, which I think we'll probably get to. The S&P also showing some weakness, but a lot better. You have a lot of staggered demand zones on this S&P on the way up. I would expect it to have a little bit of bounce off of some of those. Moving on up, crude oil. Still hesitating, right? These red lines don't really mean much. These were from a breakout piece on this candle on the 3rd of April. So it's not really that relevant. I will get rid of those and I'll get rid of that so we see a clearer picture. I still believe that $89 is the target. I said that as we broke out above that 82.50 mark or 83 mark, and I still think that's your level in play for the near future is $89, which puts more inflation pressure on our market. 10-year as well. Big surge up today. We broke that 4.64 mark, which is the supply zone that goes all the way back into November 14th of last year. After that, where are we looking? Dun, 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 dun. I will draw a horizontal line on the screen here for you, which puts us right back up to that high at 4.935. Basically, jumping up to 5%. And I think that's a very real possibility here going forward. So let's be careful. Let's see. What else do I have on here? NASDAQ. We already looked at the NASDAQ. Rolled over today. Dollar index. There's your dollar index. Screaming higher. Again, I've got multiple levels on here. I thought we'd have a little hesitation at that 105.86 mark. We didn't. I knifed right through it and still trending strong. Right now, we'll probably be looking at that 106.88 mark. Call it 107. And then after that, you've got levels about 108. So there's a big upside here for the dollar. I am definitely bullish on that dollar. I think it's going to keep on going. Les says, what about Bank of America? Yeah, so Bank of America reported great earnings today. I didn't get a chance to see the press conference. So here's their final earnings. They were estimated to make 76 cents. They came out with 83. So all in all, looking great, right? Well, boom, down 3.53% on the day. Here is their earnings report. You can see they surprised, by a good amount. But it wasn't just Bank of America. Look at most of the financial firms today. Morgan Stanley, they beat earnings by 19.5%. PNC Financial beat by 8%. Bank of New York Mellon beat by 8%. Yeah, I mean, banks, ever since we had the kickoff last Friday, have been doing really, really well. But they suffered today, even in the face of strong markets. So why was that? I think that's partially has something to do with the uncertainty of interest rates and policy going forward. But I didn't see Bank of America's statement. My guess is something was said in that press conference that caused this thing to really show some weakness here. And maybe it has to do with commercial lending and that potential house of cards falling apart, which we talked about last year. All right, what else do we have? Lost my trust a long time ago. Yeah, it really is. I agree. And it's kind of sad that we have to think that way or feel that way, but it's true. Could the gold standard be efficient if some country were mining asteroids? I would say no, because the reason the gold standard worked is there's only so much gold on Earth. If we all of a sudden find an asteroid that's just solid gold, well, then how much is that? And then the value of the gold we have here just diminishes significantly. So it's the scarcity that gives its anchor for value, right? And that's why I'm such a fan of Bitcoin, because it's its scarcity as well. Let's see. Rob says, the difference between now and then is there's an ETF to trade it. Couldn't that change the dynamics of historical action in Bitcoin? Yes, it certainly can. It also, on one side of things, Rob, it may add some stability because more and more people will be buying into Bitcoin and allocating that in their portfolio. On the other argument you can make is it actually opens the door to more manipulation, because now with the spot Bitcoin ETFs, a high roller, someone who has got hundreds of millions of dollars, could slam one of these ETFs and cause moves in the Bitcoin market and impact crypto in that sense. So kind of a double-edged sword there. You think would add more stability because you have more Bitcoin in more people's hands, but now you have another instrument for people to manipulate those markets. Remember, if you were trying to manipulate Bitcoin futures, you're not really impacting Bitcoin's price per se. It's the expectation of future price, whereas these spot ETFs are actual Bitcoin price. VB, if the government wants to track my every transaction with CBDCs, why shouldn't the public be able to trace every transaction they're taxed on? VB, you're thinking logically. How dare you think logically and sensibly? Remember, it's a do as I say, not as I do. So of course the government, nothing's trackable out there. Do anybody here actually believe the government audits? When they do their budgeting and all that stuff? I don't trust it. I would love it if we had that full transparency of government. Better yet, I was thinking years ago, it would be wonderful if, I just paid my taxes. So when I pay my taxes, it'd be great to have a list of all the things that I wanted my tax money personally to go to. Like, okay, I'm going to send it to this organization. I want to go to this government entity. I want it to go here and there. And then a lot of the garbage that many of you and I probably agree doesn't need to be there, we can just slowly get rid of it. I'd love to allocate my tax dollars where they need to go. Thoughts on ConocoPhillips short, risky but hitting supply. Okay, well, you're going against that big trend with energy, right? So COP. And then I'm going to wrap up. No, this is not it. COP. There you go. So obviously it looks just like the crude oil chart. You talk about shorting it. If you're going to go short, for me, the short would have been a couple days ago as we broke down below some of these lower tails, probably right around 130, 113. As this thing pulls back, you do have a demand zone coming up, which I would pay attention to as being that potential stopping point for this sell-off. So if you are looking at this as a shorting opportunity, you've got, in my opinion, probably down to 126. So you've only got $3 worth of profit on this one. Not that that's nothing, but your grand scheme of things is you're in the uptrend here. The pullback, that's where I think it'll base out. So personally, I wouldn't do that. I don't think I would short it at this point. You're kind of... Yeah, I wouldn't, NJ. Not for me. Their trading was up big time. Yeah. Bank of America deposits income is down because they're paying more interest to attract customers. Oh, you mean they went from 0.01 to 0.02? All right. That's going to do it for me, guys. I got to wrap up. For tomorrow, by the way, let's look at your economic calendar just so we can get that under the reps. We did have some bad housing news today. Let me go here and show you this one. Where was it for the U.S.? Oh, yeah, building permits and housing starts both declined. Not good. In robust economic times, you want to see these numbers increasing. The historical levels for housing starts have been slowly diminishing since 2022. Now, grand scheme of things, yes, it's still high, but it has been drifting lower and lower and lower. That's not necessarily a good sign going forward. So that was one bad piece for today. Let's go look and show you what we got cooking for tomorrow. You've got crude oil inventories coming out an hour before the an hour into. My clock is all wrong here today. I don't know why this clock has been constantly wrong. It doesn't give me a daylight savings time. It's at 7:30. So that's what it's showing here on my chart for crude oil inventories. You have TIC long-term purchase tomorrow, and you have several members of the FOMC speaking, so that will be your day for tomorrow. All right. My retirement plan is to invest in every stock that Nancy Pelosi owns. And that should be another thing. Every politician should have to have their investments public in real time. That's just part of your job, because your job is to make this country better. Your job is to improve services for you and I, the voting constituents in whatever state you may be in. That's their job. In reality, it's probably not that way. We're seeing certain people do things that may not be in the best interest for this country, but because they can get in early and buy construction spending for this project and then vote for that project to get approved, knowing that this is going to be the contractor, I can make a ton of money doing that. That's almost a conflict of interest there. So I think that should be something that gets passed, whereas there should be a website I could log into right now, and in real time it shows all their holdings. That should be law. If you want to be a politician, that's just part of what you got to do. And then follow Pelosi or whoever you want, knowing that they're going to be voting on issues that are going to be supporting their portfolio. I agree, VB. So here's the thing. Make it happen. Because they would have to vote on that. They would have to basically vote themselves and put handcuffs on their ability to make millions and millions of dollars. Yeah, I think they should only be able to buy indexes, S&P, NASDAQ, Russell, Dow, give them those 4, and they cannot go short. If any politician goes short on those broad indexes, they should be removed from office because that's anti-patriotic. You are betting America's going to go down, and you're the one steering the policies for the country. Beat it. Get out of here. Jimmy T, it is legal, not illegal. It is legal for anybody who's a senator to insider trade. But you and I do it, we go to jail. All right. I know they've been talking about for years making it illegal and they have to use a third party to trade, but to my knowledge, it's still legal for them to insider trade. Should never be that way. Okay, that's it. I'm going to wrap up. It's Wednesday tomorrow. Tomorrow's show, I'm going to have John Rowland on the show. Same time, same bat channel. If you guys have something you want me to ask John, put it down below any of the YouTube videos, probably the video for today if you get a chance. Put your comments down below there, and I'll get those all ready for John. Or you can email me at TraderMerlin@gmail.com. Oh, I didn't even look at that one today. Margaret says, let them own DJT. Was it still dropping? Oh, another 14% today. I did not think it would get there that quick. Holy cow. Remember, Mike, my beer's getting, you better just put it on ice, Mr. LaRusso. We're already at $22. That is phenomenal. Wow. I thought it would be, I even told you guys, I thought it'd be a stretch to get down below $18 by the 26th of April. And again, why is this? I told you when this first happened, the one thing that could really crush it, because those shares were locked up for months, is if they file an application to sell those shares earlier, which they have done, which basically tells me it's a scam. This should go down as one of the biggest scams that's been perpetrated on the public in a long time. This is a pump and dump scam. Oh man, unbelievable. Well, I pity anybody who's holding that thing. I'll get a free beer out of it at least. All right, guys, that's it. If you have 4 points to go, Mike, you do. Anyway, thank you guys so much. If you enjoyed the show, give me a thumbs up. If you're new, hit that subscribe button. Let me know what you want me to talk about with John Rowland tomorrow. It's kind of an open plate. You know, he trades just about everything and extremely knowledgeable. So if you want to learn something, let me know what it is that you want to learn, and I will make sure we get that covered on tomorrow's show. Take care, everybody. Have a great evening.